So guess where we're going next? We started high level, then we broke it into 2, and now we're going to break it into 3, right? We're just going to keep breaking out the costs into more granular levels. And now we're going to define it by activity-based costing, which, as you'd guess, requires the most information, is the most complex, and in practice is the hardest to implement because we might not have all of this information, but if we get it right, is the most accurate. So activity-based costing, now instead of allocating it by a plant-wide rate or by department, we're going to allocate it by activity. And then those activity rates are going to then be allocated to the products. I like this chart. It's saying here's all your indirect costs. We know that's overhead. Overhead is then going to be allocated to all of these activities in cost pools. And that's what I'm saying, like buckets or pools, they need to be distributed. At the end of the day, those distributions are all going to equal the total overhead cost. You're going to notice these 4 steps don't change so much. We identify the activities, or we identify the departments or the plant-wide overhead rate, trace them to the cost pools, and then determine our activity rates and then assign costs. We always have these similar steps. So first here, this is a lot more abstract and difficult in practice. I'll make sure in the homework and in the quizzes, it'll be given to you, right? Like the activity should be a lot more straightforward. But in theory, we walk into this business and we would then go and analyze all the different activities the business is doing. So here we'd say, oh, well, people are setting up machines, repairing machines, maintaining the factory. We have engineers that are getting paid salaries that are working on these. There's a power and electricity and heating and lighting. And we then try to say, which one of these are relevant to building the products? And then how can we measure each one of these activities? Like, it's not given how we measure machine setup. Is it how many machines we set up? Is it the labor hours used to set up the machines? And we try to find the most accurate predictor. And so here, we identified the activities and the costs they cause. So we have machine setup, which is about $700,000 of indirect labor, machine repair, factory maintenance, all of these different. And we figure, oh, this is really labor and this is really utilities. And so let's add this to our Google Sheet. Activity-based costing. Step 1. So copy all this over. Salaries. Is this making sense so far? While I'm typing this, if you have questions, feel free to ask them. The good question is, why is my spelling so bad? And it's because I'm typing too quickly. But I promise I know how to spell. Okay. 1, 2, 3. And so we're just oh, I must have missed something. Activity. So goes down 1. So pretty much we're saying we've distributed all the costs. As good accountants and managers, we've looked at the business and we've decided these are the costs we're seeing for each of these activities. We got our heating bill, we got our machine setup bill, we got our repair bills, all this. And we figured out these seem like key activities. And these are the total costs associated with them. And now we're going to say, okay, what are our activity pools? Like, what are after observing all of this, what's really driving these costs? And we're saying here, the manager determined, or the accounting manager determined, there's craftsmanship, setup, design, and plant services. These are the main activities driving these overhead costs. So let's write that out. Step 2, craftsmanship, setup, design, and plant services. And then now we have to figure out which one of these, how these costs relate to each step, each of these activities. So we're saying craftsmanship. Well, that really is assembly line. So we can say here, activities, and then our associated costs. So we're saying craftsmanship. What out of this kind of would involve craftsmanship? They're saying, you know what, it's really just power. That's the only indirect cost we have associated with it. And then the dollars related to that are 600,000. They're saying the setup, well, the machine setup, the costs related to it are the machine setup costs. Well, that makes sense, right? And the machine repair. When we're setting up the machine and it may cost money to repair it. The design costs, oh, well, the engineers are really driving the design costs. That makes sense, right? Like engineers design things. And then the plant services, that really is the factory maintenance and the heating and lighting. And then the way we can check to make sure that we have allocated all of our costs to proper services is here. The sum should equal the total allocated costs. The total costs allocable should equal the total costs allocated. So we allocated these costs to these activity drivers. Yes, Michelle?
So in terms of organizing the chart, which one do we, how do we know how to like put it in the right column?
What do you mean? What's the question?
Like the assemble line, then the activities, like how do we know which one to put?
Yeah, so good question. This I will give to you. I'm just walking you through how you do it in practice, but in your homework and quizzes, it'll be implied. It'll say this activity relates to these costs. It'll tell you. Yeah. Good question. In practice though, right? Like in the real world, we'd have to use our judgment.
Okay.
Does that make sense?
Yeah.
Cool. Good question. Okay, so then we're gonna go to step 3. What are our activity rates? So right now we have these activities. How will we measure each of these activities not tied to the costs so that we can then determine the costs? So let's pull these up again. So what's our, these are activities. What drives them? They're saying what's a proper measurement and what's a proper identification of them.
The output?
But yeah, exactly. You're thinking about it correctly, Saeed, is how do we figure out the output? The main output of each of these activities and the main input too, right? Like, so we'll see all the inputs that create some kind of combined output. We're trying to figure out how to measure those inputs. What's measurable? So good way to think of it. So we're saying here is, of these activities, what's the activity driver? And so that's really what we're trying to get at is the activity driver, Saeed, which is good, is right. Like what is driving the output, which is what's our main input. So for craftsmanship, that's direct labor hours. That makes sense, right? Like craftsmanship means that people are building something. Setup is probably batches, like how many batches are being completed in a setup Design modification, well, we might say number of designs. And plant services, well, maybe that's square feet. Like how big is our plant and how much of that plant is being used by certain products? Because that's like our heating and lighting, which makes sense, right? Like that light has to be evenly distributed. And so we know the overhead costs to assign to these pools. We did that in the previous step, right? Craftsmanship supposed to get 600,000. Setup supposed to get 2 million. Design supposed to get 1.2 million, and plant services is supposed to get 1 million. Cost to assign, or and that we check to make sure we're not missing anything by adding all these together. And then we get the expected activity level. This will be given to you, right? Like, so in your homework and quizzes, the expected activity level will be given to you. It's just you'll have to match it up and do the math and understand how to solve these, how to solve like the word problems with it. So it'll be like a paragraph of word problems saying, here's your direct labor hours, here's your activity base, here's your cost to assign, and you'll have to then figure out how to plug it into one of these equations. So expected activity level is the 600,000. So expected activity level is at 30,000 direct labor hours. We say we have 200 expected batches, 10 designs, and then the building we're using is 20,000 square feet. And then we can determine an activity rate. So we get $20 an hour, $10,000 per batch, $120,000 per design, and $50 per square feet. So now we know all the different activities and the cost per activity. And now we just need to figure out our activities by product, right? So now there's what our product or the cost object. That's our final step. So we can see, right, this is it's hard enough just doing it in this fact set. Like not really hard, it's not the right answer, but there's a lot of steps. So you imagine doing this in practice and finding all this information out is could be rather difficult and time consuming. It's like a full-time job. Because imagine walking into a warehouse with 100,000, maybe not 100,000, but 1,000 people working in it, and you start having to count all this and find this information. It's an interesting problem, but it definitely takes time. So how do we assign the cost, assign the overhead cost to the cost object? I mean, all these charts, let's see. We're still building go-karts, right? This is all related to go-karts. It's the same fact set. It's just we're adding in these activity-based. So we're trying to figure out how do we allocate each of these to the different products. So activities consumed, timed activity rate. So each product should take a different amount of activity. So our craftsmanship, we're saying the standard go-kart. Let's figure standard go-karts versus custom go-karts. So standard go-kart versus custom. We have our craftsmanship. So we have our cost object, also known as our product in this case. Then we have our craftsmanship. Let's see. Setup. Our design phase, and our plant services phase for each of these products. And how they're saying for standard go-karts, we use 25,000 direct labor hours, 40 batches, 0 designs, and 12,000 square feet of the plant. So now we'll have to assign cost to these, right? So craftsmanship. So we'll do this craft cost, setup cost, design cost, and services cost. What we're going to do is we're going to multiply these activity drivers and the activity hours by the rates we assigned. we calculated above. So $20 times that. We get the 10,000 times the 40 setups, the 400,000 design. It's $120,000 per design, but we don't use any designs for standard go-karts because they're standard. And then we have the $50 towards the plant services. And then the total overhead costs assigned will be here, 1.5 million. For the custom go-kart, we have 5,000 direct labor hours. So we're using more labor hours. I mean, less labor hours because we're building less go-karts. There's more setup because they're custom. So we have to set up more machines. All of the designs are related to the custom go-karts. And we're using less square feet of the plant because we're building less go-karts. And then we'll do the math again. Custom go-kart times the rate. So less labor hours, less setup, more setup. All of the design costs. And a little less plant services. We get our total overhead rate. Here, 3.3 million versus a 1.5 million. Now, wow, what a difference, right? We're using the same, we're in the same business model, but now we've determined, remember our original, we determined that our standard go-kart was 1.5 and then the custom was 2.3. Now we're at 1.5 and 3.3 of costs. Let's see. Oh, wait, sorry. What was it? Sorry, originally we're at 2 million. You can go back. Well, I will go do comparisons. But the main point I'm trying to take away here is that it's swinging wildly, right? The amount of allocation swings wildly by the methodology you're using. So I think we have a comparison down here. So we assign cost the cost objects, which we just did. And so here's a good comparison. So we find by using the activity-based costing that it costs us about $300 a go-kart for overhead, a standard go-kart, while most of our overhead actually goes to the custom go-karts. While in the plant-wide method, we get 720 for a standard go-kart and then 1,200 to the custom go-kart. Can we see why this would be a problem? Like, by using the plant-wide method, we drastically underestimate the cost of a custom go-kart. And the main reason of that was because we didn't take into consideration the design costs. Like the engineers cost a lot of money and they're only for the custom go-karts. And so if this was the case, we maybe should be selling our standard go-karts for significantly less and selling more of them. Or maybe we might be selling our custom go-karts at a loss. And so we're going to talk about that in the next class a lot, is about like variable costing models and break-even analysis. And why sometimes, like maybe it doesn't make sense to sell the custom go-kart. Maybe we just sell standard go-karts if we can be selling them at the current rate. Maybe that means we don't need engineers, right? And that's where we're always constantly refining our business. So hopefully we see that's like a pretty comprehensive example with the math behind it for every single method that you'll be testing on: the departmental, the plant-wide, and the activity-based costing. Any questions?
Wait, so the third one was the price they're selling it at?
Well, so this is the cost, right? And the cost in theory, the price we sell at is determined by the market, right? Like who wants to buy it. But it determines our profit though, right? Like our profit, it might be more profitable to make standard go-karts than it is to make custom go-karts.
One judgment. Okay. I thought
because we need to figure out how to associate the costs with them. Does that make sense?
Yeah, I was a bit confused. Thank you.
Yeah. And that's the important part of business. One important part of business. It's an important part of self-management. It's like, let me give a good life example and something that you should all, I've seen this before and I've done that. I've lived this. Let's say you get a job, right? Let's say you get a job, but it's in San Francisco and you live in South San Jose. All right. Everyone kind of gets that distance. Well, it's probably like a 2-hour commute. Does that seem fair? Hour and a half, 2-hour commute, maybe with the BART, maybe, or a drive. Is that right? Seem right? Does that seem like a kind of maybe 2-hour commute, right? Each way. Let's just say 2 hours. Let's say you're doing that 5 days a week. So that's 4 hours, 5 days a week. That's an extra 20 hours of commute time. And let's say you don't own a car. And so you're commuting 20 hours and now you have to go buy a new car. Crazy car market right now. And you have to spend $20,000 for a car. Personally, and then the job pays you $15 an hour or let's say $20 an hour. Very low paying job, but it's the only job you can find, right? Does it make sense to take this job? Probably not, right? Your car, you have to allocate. Do you actually need this car? You only need it for your work. So that's a cost related to the job. Then you also have this commute, right? And that commute where time that you can maybe be taking a less paying job. Let's say there's a $15 an hour job right next to your house, or you can take a $20 an hour job in San Francisco. What do you take? You take the $15 an hour job because you don't need the cost associated with it, right? But I've met a lot of people who take the job, the higher paying job, even if it's a farther commute. They don't take into consideration like, oh, there's gas costs, there's the car cost, there's the opportunity cost of my car, my commute time. There's the risk of insurance and the cost of insurance that goes up, right? Like the building the discipline to think about how to allocate costs to the activities that generate income help us in all aspects of life, right? Like it helps us make better decisions. Nothing's simple, right? The problems can seem simple on the surface, but the answers you can really dive into making them more fulfilled and comprehensive. Does that make sense?
Yep.
Cool. So if anything, none of you go drive 2 hours to take a small raise, right? Talk to me before you do that. Okay. So what's advantages and disadvantages? I mean, can anyone summarize this for me? I think we've talked about it a bit, but if you could rephrase this all in one sentence, what would you say?
That is just a better way of using it. However, your decisions might not be 100% accurate or like beneficial to the company.
No, so I'll say the first one is right. Say this first. The second, the real disadvantage is the complexity, right? Like we always risk that your decisions might not be accurate if our information isn't accurate. So that's a good identification. The real problem here is this is very time consuming. And who has this kind of knowledge to do it correctly, right? Like you need to first understand this information, then you need to know it well enough to apply it, and then you need to then apply it correctly. And that could be, maybe a managerial accountant costs $100,000 a year to go then spend a year figuring this out for your business and then making sure they're executing on it every quarter, right? So that's really the cost to implement and maintain. And then there's still uncertainty. But the advantages are well outweigh the disadvantages. Like, hey, if that one accountant can save you $1 million a year, are they worth hiring? Yeah, of course they're worth hiring, right? You make a profit. Let's keep going down. So what are different types of activities? This is all conceptual, right? These are just frameworks to think by. They're not entirely, they're not the gospel, right? They're not the sole truth. These are just ways to think about it differently if you're getting stuck. So like we can think of activities at a unit level, at a batch level, at a product level, or at a facility level. At the unit level, we're talking about the labor hours to build each unit. The batch level, we're talking about those setup costs. At the product level, you might be talking about applying the designs, right? Like the design for each product. In the facility, we're talking about like heating and electricity. That's all we're getting. And these are just some examples. We don't need to go through them all, but the idea is like, as we go up or down in aggregation being like more granular, more specific, to more aggregated, like more broad, more high level, then we are going to have different considerations. And then here's just some examples. So this is just a list. I don't want to read you a list. That sounds not fun for anybody. But you can go through and kind of try. I would say it's worthwhile to memorize and understand like how the unit level, what kind of activities would drive a unit level activity, or would be considered a unit level activity, and then the drivers for those. Like if we had to cut stuff, cut parts, that's probably machine hours. Or if we're assembling components, it might be direct labor hours because that requires assembly. And here's some more examples. This is another good example, is like there's this concept of cost of quality, which lists costs of quality activities by category. And so we should, these are just higher level concepts, but we shouldn't just be measuring activity-based costing, the concept of, how do I want to say this? We shouldn't just be measuring factory overhead. Like there's other things to consider. And the concept of measurement is actually pretty exciting, right? Like that's what a scientist does, right? Any kind of scientist, they're really obsessed with how do you measure, how do you solve a problem? And how by solving that problem, how does it make the world a little bit better? And so what else might be associated with the cost of a good? That's really what we're trying to ask here as a managerial accountant. That's like the scientific question. What's associated with the cost of a good? And one of the things that are associated, other than like factory overhead, is the cost of quality. So what about training costs? Like we figured out factory overhead, but what about all the cost to train all these employees that are participating in this? What about like the products that fail? We get returns. Should we consider that? What about the products that are scrapped? Or what about testing products or prototype products? Or warranties claimed? And so we could also associate a top cost of quality for each item and then build that into the cost of the product, determine if we're profitable. This can be a very interesting line of business. Teams now have professional pricing teams, and this is what they're focused on. It's like it's the next step. Like how do we determine the cost of our products? And then how do we price that in the price our products in the marketplace to be competitive? So how do we make sure that the products we're selling are actually profitable, but then we still are pricing them at a point and marketing them in a way that make it competitive in the marketplace? Like it's a pretty complex problem when you have a lot of competition. You don't want to price so low that you lose profit, right? Then you're not in business. Then you're just losing money. But you don't want to price so high that you can't compete. So to know how you want to price, one of the key drivers is making sure that you don't go below your costs. And what we're learning here is, hey, it's not that easy to determine what your costs are, right? Things are pretty complex. That's okay because we're all in this class and we're all going to learn how to do it. So the thought is like, hey, cost of good quality versus cost of poor quality. Way I think about this, you could think about it in college, right? I've had students ask me like, hey, why shouldn't I cheat? Why shouldn't I, especially in a work from home environment? Like it's a lot easier to cheat, I'm sure. And the thing is, it comes to this cost of good quality and cost of poor quality. It doesn't matter if you cheat, like if you cheat, maybe pass some classes and get away with it for a while, eventually it's going to cause you to fail. Eventually you're going to be in an environment where it's higher risk, and with that higher risk, there's a higher cost of failure. And that failure cost is from poor quality, right? Like you didn't put the effort in up front. I know this seems like a stressful environment. This is college, but the worst case scenario right now is you take this class again. But imagine you graduate. Imagine you're able to cheat your way through college. I don't think that's possible to get all the way through the 4 years. Maybe some people have claimed to do it. But then you get your first job. And then what if you fail at the first job? You get fired. And not only get fired, you get a bad reputation in the marketplace for not knowing the work. That's a much worse risk, right? That's a cost of poor quality. What's the cost of good quality? You spend the time up front, you spend a little extra money. It might prevent failure in the future. And it might raise your value in the marketplace, right? Like it raises the same thing with products. It raises the value of products in the marketplace. You go and get your 4.0 or your 3.0, your 3.5. People know you know what you're talking about. And let's say you got a 3.5 without cheating, or you could have got a 4.0 with cheating. it doesn't matter. The 3.5 people are going to see, you know what you're talking about. You're going to be worth more in the marketplace. This other concept is lean manufacturing. Know that this was originally a Japanese concept. It's becoming very popular. Honda, right? Like Honda and Toyota have made like this concept really popular. The idea is to reduce costs. And so one of the largest costs associated with businesses is storage and space, especially as like being in the Bay Area, right? We know that space costs a lot, right? Like rent is expensive for anything. So do we want to have to store a bunch of products in a spot? I had a friend, let's say I had a friend that I was advising on his business, and he made a product that he sold on Amazon. He bought 10,000 units of this product, right? He was selling them for $20 a piece. We'll just say there's some type of like puppet, right? Like some kind of toy. He was going to sell them $20 a piece. And so he's expecting to make, $20 a piece, 10,000 units. He's expecting to make $200,000 off of it. He spent $10 a unit on them, right? And so 20 minus 10, he was expecting to make $10,000, $100,000 in profit. The problem is he didn't take into consideration the storage. He bought a lot because when you buy a lot, the factory can produce them at a cheaper amount per unit. He bought a lot, but then he had to store them in an Amazon warehouse. The Amazon warehouse charged him by square foot, like a few dollars a month per square foot. And all the storage of all the boxes wound up costing him about like $3 a month per unit. Soon he was very quickly negative, right? Like he quickly went underwater on these products because he had to store them and wasn't selling them quick enough. So a lot of businesses had this issue of we have so much storage and it's raising the cost of our products because it costs a monthly amount to store all these units. And there's like waste in it and there's theft and there's all these issues. And so the answer was, well, why do we need to store units? Like, why do we need to even store products? Why don't we just build them when they're needed? So the quicker we can get to the building to delivery and purchase, the better. And that's this concept is like eliminate waste. Make sure we're not using storage. Make sure we're like using as quick of a process and quick and efficient as process as possible to get the product to the end user. And then this also applies to service levels. So like I would use, you can look at this for online education. You register at the unit level. I deliver the online course at a batch level. I might create new courses at a service level. And then at a facility level, you like have the college maintaining all of this websites. As a consultant, you can look at this too. Last piece is like what we're going to really try. I think the next class, if you guys show up to any class in this lecture, the next class is the golden one, right? Learning about break-even analysis and fixed and variable pricing is awesome. It's going to be really exciting. It answers a lot of questions that business students want to have. Like if you're going to want to make a business plan, that's the class where you use that kind of information to build into your business plan. So the idea here is we should assess the profitability of each one of our customers. So I messed up on this when I used to have a recording studio. I didn't realize that my customers were weren't profitable. They'd come in and they'd spend like $20 to $100 an hour for recording services, but I didn't realize if like allocated factory overhead to the services, they were unprofitable because my rent cost so much. So this is really important, is when we're looking at a customer, we would decide, do we want to keep that customer and what customers do we want to keep? And so I consult for a lot of young business people and work with them on identifying, like that's a whole area of like, what kind of customer do you want and what kind of services do you want to make sure you're profitable? And there's only two ways to get profitable, right? Is increase your selling price, increase your amount of sales, which is either through volume or through increased price and value, or by decreasing your costs. And so that's kind of what we're looking at here. Okay, any questions? That's the end of the chapter. I'll stop recording.